Without a doubt, one of the most common goals for traders is to get funded, and they want to be managing funded capital at a prop firm. I've had the opportunity now to work with many different prop firms and consult for them. I've also helped many traders pass the funded challenge and ultimately sustain a funded account. And in this particular video, I wanted to share my honest thoughts on prop firms, funded accounts, and give some tips and tricks that will help not only secure a funded account if you choose to, but to continue to hold on to it for the long term. Now, for those of you checking into the channel for the first time, first and foremost, welcome. My name is Pat Bayluni, and I'm the founder of Master Your Trading Mindset, which is an education and performance coaching business. And we work with retail traders all around the world, helping them break through the psychological challenges that hold them back from consistency and funding. And we have our free Bulletproof Your Mindset tool. This is a tool helping hundreds of traders all around the world gain more consistency, lower their emotional volatilities in the market. If you don't already have a copy, it's completely free, but only 30 copies of this go out per week. So jump in the description right now and grab a copy. When we talk about my honest thoughts about prop firms, there are a few things I would love to mention. First and foremost, I think prop firms are a great option. I want to just go on the record and say that I think they're an amazing option as a stepping stone in your journey. I think you get an opportunity to trade larger amounts of capital with relatively low risk. And I think that compared to going off and getting that capital and sourcing it yourself through some sort of private investment deal, everything's organized for you, everything's so streamlined. And all you have to do is create a great strategy. You have to get your mindset on point and you have to pass a challenge, and then everything's automated. So I think prop firms, the way they're set up and all those types of things, give traders a great advantage to progress their accounts, to progress their income, to progress their skills as traders, to learn a lot, to develop a lot. However, there's a big caveat here, and that is that what a lot of traders then do is they put these funded companies up on a pedestal, and the funded company now becomes the standard or definition for success or not success in the industry. And let me explain what I mean by this. I've seen hundreds of traders who fail a challenge or get a funded account and lose that funded account, and now all of a sudden they're labeling themselves an unsuccessful trader. And they're self-minimizing, and they're thinking they're not good enough as a trader, they're not good enough as a human being, because they can't pass one of these prop firms or funded accounts. And what I wanted to say is that's complete trash. I think that's just such an incomplete belief system, and something that I believe no trader should subscribe to. I think whether you're a funded trader or not has no real impact on whether you can call yourself a successful trader or not. And I think if you fail a funded account, that's fine. I know some really great traders out there who've failed funded accounts and aren't funded, but they're exceptional traders. And the reason why I've seen most traders do fail these funded accounts and end up beating themselves up is because of the environment that is created around the prop firm. Now, we have to understand the prop firm's a business model. They need to be profitable to sustain their business model. So they're gonna, put the odds in their favor to be a profitable business model, but they're also gonna continue to incentivize traders, meaning that they do have an incentive for successful traders, and there is a great option there for traders. But by no means, if you fail the funded challenge or if you get your account and then lose it, are you an unsuccessful trader or a bad trader or a bad human being. I just wanted to clarify that. So what I think is incredibly important to recognize is that the funded companies have certain rules, have drawdown buffers, have all that type of stuff. And what you need to do before you go for the funded account is you need to figure out, how am I going to use these rules to my advantage? How am I going to establish processes or things in my trading that allow me to successfully trade the funded account and not hit the drawdown buffer? A recent one that I've discussed with a client is that, let's say, for example, the funded account has a -10 drawdown. A very smart thing you can do is you can have a tiered risk gradient system to your risk. So maybe you risk 1% of capital, and between 0 and -5 drawdown, you risk 1% capital. But then when you go between -5 and -7.5 in the drawdown buffer, you're now risking half a percent. And then when you go between negative 7.5 and negative 10 in the drawdown buffer, you're now risking 0.25%. So what you're doing as you're going more and more into the red, you're scaling and creating a gradient to your risk model, and you're adjusting risk ever so slightly to meet the prop firm's model and make that suit your trading plan. Now, instead of having 10 losses that you can take, for example, maybe a little bit more if you're risking percentage, you now have 15 or 20 losses you can take, for example. So this is an example of using the prop firm's models and integrating that into your own trading plan and refining your processes ever so slightly to make them suit. I think prop firms are great. I think they're a great option, but don't define your success whether you're a funded trader or not. And then I hear a lot of people who are, a bit upset about the current rules they have and the drawdown buffers. Use them to your advantage. Instead of focusing on the problem, you'll get more problems. Focus on the solution, you get more solutions. Ask yourself, how can I use this to my advantage? And how can I refine my processes and my systems to actually improve my systems? Because now I'm trading funded capital. I've seen many traders progress their trading because now they have rules and more structures in place by going with prop firms. So you want to use all these things to your advantage as best you can. Now, another key thing that I see with traders is that they're so highly infatuated, or they've got funding way up on a pedestal, that their only goal, their only thing in mind is, I want to become a funded trader. I want to become a fund, that's it. And what they actually do is they create a brick wall in their mind. So when they eventually get funded, even though the probability is low if you've got it up on a pedestal, what happens is you get funded, but then what's next? There's nothing next. You hit a brick wall in your mind because you've got no vision beyond the funding. And what ends up happening in this scenario, you've got no more motivation or discipline or incentive to continue to put the work in, and ultimately you tend to lose the funded accounts as a result. So what I've seen as an incredibly wise thing for traders to do, just in shifting their perception, is see the funding account as a stepping stone along your overall journey as a trader. And instead of just thinking, I just want to have one funded account, I just want to be a one funded trader and nothing beyond that, expand your vision so far as a trader, not fantasies, but your vision for it, and see yourself picking up multiple funded accounts, then maybe running your own fund, and then maybe running your own prop firm, whatever it may be. I just encourage people to expand their vision for it and think, what can I do that's authentic to me, and how can I expand my vision for my trading so that I can have a bigger vision for my trading, and I'm not so caught up in this, I have to get funded, I have to get one funded account. And usually one of the best ways to do that is just to ask yourself, what do I love to do every day? Have a look at what your life demonstrates is important to you. Use the funded account in your trading to fuel that. For example, for me, I knew I loved psychology, I loved human behavior, I loved the markets. And for me, trading to a certain point was a vehicle to allow me to do that full time and to study and to create ideas and to create lessons and to create insights so that I could eventually build the business that I have now, the education performance coaching business. So I had such a big vision for my trading initially that getting a funded account, losing a funded account, that stuff didn't matter to me in the grand scheme of things. The vision was there, the reason why was there. So day to day was a lot easier, and the emotional volatility started to lessen because I had a big vision for my trading. So to recap, and just to give an overview, I think funded companies are great. I've worked a lot alongside some of them. I consult for some of them. I create content for some of them. And I think they're a great option. I really do. But by no means do they define whether you're a successful trader or not. And by no means, in my opinion, should they be the end goal for a trader. I think they're a great option. I think you can build a really great, relationship where they provide capital to you, provide a service back to them. But have a bigger vision for yourself. Have a vision beyond yourself just trading for a prop firm, and use those prop firms along the way to build up your trading and build up your capital and increase your income so you go off and do something amazing. That would be my suggestion, at least. That's what I suggest to my clients, to my guys and girls who go through the 12-week challenge. It's all about getting yourself in a position where you're doing something that you love and you're doing something that you're incredibly inspired to do, and that's when you start to build some serious momentum. So hopefully this is insightful. If you're interested in any way in learning the principles that I developed on mitigating the emotional volatilities in the market, building consistency in your trading, and securing these funded accounts and scaling them and continuing to trade them for the long term, I'm going to encourage you to check out the 12-week challenge. We've had some transformative results in that program. A lot of my students from that 12-week challenge are getting funded, and they're sustaining these funding accounts as well. So if you're interested in that, check out the resources below. There's more information in the description below.